And welcome everybody to the Texas REIAs, the largest network of real estate investor associations and real estate investors in the great state of Texas. 150,000 members, participants, and attendees going back to 2003. The Texas REIAs provides resources for Texas real estate investors. What kind of resources? Training, vendors, money, and market updates. And we're going to do a very quick market update right now and give you some data to show you what's going on in the market. So this is the roll-up for the real estate market in Texas right now. The average price in Texas is $436,000, up 1%, basically flat, but 1% from 1 year ago today. Median price $340,000, down 1.5%, basically flat from a year ago today. But if you want just one and only one data point that kind of shows you what's going on in the market, I would say it's this one right here, months of inventory, months of inventory. What does that mean? If you took all the houses for sale on the MLS and you said, we're not going to add any more, no more houses for sale, we're going to just take what we got and we're going to sell them until we're out, until the shelves are empty. How long would those houses last? The answer, 5.8 months, which is the average amount of time it takes to sell one house. Now, that's the average. Some are more, some are less, but it all averages out to 5.8. Now, let me put that into perspective. They say if there's less than 6 months of inventory, you're actually in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. So technically, as I was talking about before, we're still barely in a seller's market. Now, a year ago, we had a good seller's market, 4.7 months, but we're still in the seller's market area. Why? Why didn't the market correct? Why didn't the market crash? What happened? Well, let's look at the history. 2021 prices went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. 2023, flat. 2024, flat, until at the very end of the year, it went up a little bit. Why did it go up a little bit? What happened in the last part of the year last year? Interest rates went down a little bit. So let's talk about interest rates. Interest rates is the biggest story in real estate over the last few years. Interest rates went up. So when interest rates go up, what happens to home prices? Do they go up or do they go down? Well, we got some ups and we got some downs. So here's what I'm going to tell you about interest rates and home prices. Home prices don't care about interest rates. Home prices care about supply and demand. Now, for sure, when interest rates go up, mortgages are more expensive. Payments are higher. Fewer people can afford them. And when there's fewer people that can afford to buy a house, you have less demand. And less demand pushes prices down. But there's an offset. What's the offset? Normally, two-thirds of houses for sale are resale and 1/3 are new construction. Right now it's inverted. Why is it inverted? Why aren't people selling their houses? What do you think? Because they got a 3% mortgage and they don't want to give it up. The economy is not bad. People should be saying, honey, let's go buy a bigger, nicer house, but they're not selling. They're just staying where they're at. Why are they not selling? Because they got a 3% mortgage and they don't want to give it up. So all that supply is off the market. So yeah, we have less demand, but we also have less supply. And when you have less supply, what does that do to home prices? Pushes them up. We got things pushing down, we got things pushing up. We got some other problems. I don't know if you know this, but nationally and in Texas, we are in the middle of a housing shortage. Who's heard of this? We have 6 million fewer houses than we need for all the people that need a place to live. And when you don't have enough supply, what does that do to prices? Pushes up. We got another problem that's very unique to Texas. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And there's another 10 million people, we don't know where they went, but there's a bunch of them here too. And they all need a place to live. And we don't have enough houses. So when you have too much demand and not enough houses, what did that do to home prices? Pushes up. So what saved us from market crashing, housing shortage, right? People are not selling their houses, huge in-migration, right? And all that caused the market to just flatten out. So where's it going? The economy, green is up, yellow's sideways, red is down. The economy is doing okay, right? Consumer confidence is kind of neutral. Unemployment's pretty good. Business growth, pretty good. Affordability, interest rates are higher, right? That's pushing prices down. Price trajectory is flat, sideways. Housing supply, active, flat. Months of inventory, right in the middle. Construction labor growth, we got a problem. Contractors are dying. The average general contractor is 58 years old and they're not getting replaced. So it costs more and more and more to build because we don't have enough labor. So if you have a teenager, here's some advice. Don't send them to college. Buy them a hammer. Yeah, I'm serious. I know plumbers right now, some plumbers are making $1 million a year. You can go to college, study something stupid, get a bunch of student debt, graduate, work for some jerk, and get paid $65,000 a year, or you can become a plumber and start making $1 million, right? I mean, this is real. I went to college, my parents went to college. Now I have a 16-year-old boy, and I could absolutely care less if he goes to college, all right? Even though I went to college and my parents went to college, I think there's plenty of things you can do. But seriously, contractors are making a fortune right now. And because of that, it's harder and harder and more expensive to build, right, which is driving prices up. Demands, closed sales trajectory flat, pending sales trajectory flat, a lot of flat. Migration's the big one, though. That's the ratio of people moving in versus people moving out. Our population's growing. We're not building enough houses. Everybody's got to live somewhere, either rent or buy. And that's driving the demand up, which is keeping prices up. So where are we going from here? And by the way, I didn't create the forecast. Most of this comes from the Texas A&M School of Real Estate and a number of online resources. But this is what the experts are saying. If you were looking for some big, exciting market crash, that was probably it, and there wasn't much to it. Right now, we expect interest rates will probably start to fall between now and the end of the year. That's what the experts are saying. Interest rates falling should juice the market just a little bit on the buyer side, but probably not much. So we expect prices to be pretty much flat for the rest of the year. There's some little things pushing up, there's some little things pushing down. Inventory is growing a little bit. Interest rates will help a little bit. You put all that in a blender and push the button, and we're pretty flat.